Hey guys, I've got my friend Lauren here today, and we're talking about FHA versus conventional loans. We're going to tell you everything that you could possibly want to know about the differences between the programs, the pros and cons, but stay tuned to the end because you're going to find out in a competitive situation, if there's more than one offer on a home, which one is going to give you a leg up on the competition. Lauren, tell us with FHA versus conventional, what do those down payments look like? What's the difference?
Yes, so down payment is definitely the biggest hurdle for buyers to get over when buying a home. So it matters. For a conventional loan, you can put down as little as 3% if you're a first-time home buyer. So if you've owned a home in the last 3 years, you're not a first-time home buyer, and it's actually 5% down.
Okay.
That's conventional. For FHA, it's always 3.5% down. So depending on if you've been a homeowner in the past 3 years, you'll have to put more or less down with conventional compared to FHA.
But you don't have to be a first-time home buyer on either one, but you can be a first-time home buyer on both.
Correct.
Okay. On conventional, it can be as low as 3% if you're a first-time buyer, 3.5% if you're FHA.
That's right.
Cool. So with regards to interest rates, like your credit score is going to be the biggest influence on your interest rate on either program. So tell me a little bit about what interest rates look like on those programs and if there's one that's maybe more advantageous than the other.
Yes. So we have great lender options for conventional loans and FHA. And it really does, you're right, depend on your credit score. There's, of all the things that factor into your overall monthly payment, that's what we look at. So you can section out, hey, the rate's higher or lower on FHA versus conventional, or mortgage insurance higher or lower on FHA. So we really look at that overall monthly payment, what's going to be most advantageous for the buyer. But to answer your question,
we've got lights here, so
I talk with my hands.
We're just going to keep bumping them. It's okay. Anyway.
So your question of what's better, it just depends on the file. It really depends on the file and their credit score.
But you brought up mortgage insurance. So first of all, what is mortgage insurance?
Yes. So mortgage insurance, I like to think of it as the amount of risk that a lender is taking on when they lend money. It's a little bit of their insurance policy.
Okay.
It's mortgage insurance.
And so that policy that the lender is taking out, you're paying for it, but the lender's really, the policy is on you as the buyer. And, a lot of people, it's really there in case you default on that loan, right?
Correct.
And I know you as the buyer, you're thinking, I'm not gonna default on my mortgage. I'm good. You don't have to worry about me. But that's what mortgage insurance is for. It's because you don't expect it to happen, but sometimes life happens, right?
Correct.
Think about it this way. You don't ever expect your house to burn down, but sometimes houses burn down.
It's happened in the history of,
Yeah, and that's why you have homeowners insurance. So mortgage insurance is the same thing. You don't expect to ever default on your mortgage, but the lender wants a policy in place in case it does happen to make sure that it's covered.
Yes.
Sound right?
Yep.
And so with mortgage insurance, both programs may or may not have that, is correct?
Yes. So That's where when you hear 20% down, you have to have 20% down for a conventional loan. That's not true. It's one of those big myths in the real estate industry. But in order to not have mortgage insurance, yes, you need to put 20% down on a conventional loan. Okay. So if you don't put 20% down, if you put down as little as 3 to 5%, you'll have that mortgage insurance as a part of your monthly payment until you've put essentially 20% down and 80% loan to value.
Okay, so
that's conventional.
When you get to that, when you've paid 20% on a conventional loan, then that mortgage insurance can fall off.
Yes.
And so what happens to your monthly payment when that happens?
It goes down.
Yes, we all like that. We love it when our monthly payment goes down.
That's right.
Now, that's not necessarily the same on FHA though, right?
Correct. So you could consider a con of FHA is that mortgage insurance every month is there for the life of the loan. It won't ever fall off.
Okay. The only way that you could get rid of the mortgage insurance premium on an FHA loan would actually be to refinance out of that into a different loan product, right?
For the most part, correct.
Okay. Now, one of the other big things when it comes to FHA versus conventional and trying to figure out which one is best for you is how you qualify for that. And part of that is a thing called DTI.
That's right.
We hear that term DTI tossed around a lot, but what does that stand for?
Yeah. So DTI is debt to income ratio. So how much money you've got coming in versus going out every month.
So it's just literally a percentage that someone is calculating. Mm-hmm. You've got $10,000 coming in every month in income, and you've got $5,000 going out toward debts like a car payment, credit card payments,
student
things
loan
like that.
payments. Mm-hmm.
But that
co-signer on a loan.
But that DTI does not count things like your power bill and your water bill, right?
Utilities don't count. Child care doesn't count. If you tithe, that's not included. So that's where it's really important to have a mortgage loan officer that you trust to have those conversations of, hey, what's included in this and what isn't? What does this really feel like if I take on this new mortgage or monthly payment?
Yes.
How does that actually feel? So there's a difference between what guidelines will allow you to borrow and what feels responsible and right for your financial goals.
The FHA allows us to have a higher amount of debt when you add in that mortgage versus the conventional. And we've been talking about the importance of, well, you don't want to stretch your dollar too much. You don't want to overcommit your monthly budget because that may be unhealthy for you financially. But what's a good example of when it might not be a bad thing to use that extra room and stretch that budget a little bit?
Yes, that is a great point, Chris. So just last week, I was talking with a borrower. They couldn't use spouse's income. They hadn't been working long enough to be able to count it. So they really made double what shows on paper.
Gotcha.
So when you're looking at all the factors of which loan program I should go with, monthly payment being a really large portion of that, the deciding factor for them was, hey, we can actually get approved for the home that we want under FHA and not conventional. So they were able to stretch their DTI a little farther, and that's what made most sense for them.
That makes a lot of sense. So if you got one spouse, that's definitely contributing to your monthly budget, but you can't necessarily count that person for whatever the reason may be. If you have the money there, you may be a little more comfortable with taking on that higher payment because you can handle it.
Yes. How it looks on paper and how it feels in real life can be different on both sides of the spectrum. So that's an important part of the equation.
And that monthly payment conversation is key. And just like you were saying, that's having a local mortgage broker that will have that conversation with you. Just because you are allowed a certain amount of debt and to take on a certain amount for a mortgage monthly payment doesn't mean that maybe that's responsible.
Debt to income ratio on a conventional loan versus FHA, lenders look at that differently.
Okay.
You could think of conventional is going to be more conservative with that debt to income ratio. FHA, you can push it a little farther.
Okay. So on FHA, you're allowed a little bit more debt, exactly. Which many times, if you're a first-time home buyer, that can really help you out. And on conventional, you're allowed less debt. And so that all plays into that monthly payment and your overall affordability as well, right?
If you're comparing conventional versus FHA, there are a lot of factors. One of those being you will be able to get a mortgage for more under an FHA loan than a conventional loan.
So not necessarily on the purchase price, but when you add that loan amount or that monthly payment for the loan plus any other debt you may have, your overall percentage of debt to income could be higher. You could have more debt on an
Yes, you can
FHA loan.
afford, yeah, you can afford a higher monthly payment.
Right.
Yeah, it's a great conversation to have with your loan officer, the pros and cons of these loan programs, specifically with conventional and FHA. Monthly payment. I'm going to keep going back to monthly payment, and then affordability to get you in the home that's right for you. How does that look between the two?
And that's so important to think about. Like, I have a client right now that actually called Lauren about helping them be able to purchase a home, and they had this conversation about affordability, what the person is qualified for versus what they are comfortable paying is not the same.
It's different. It's different.
And this particular person said, hey, I'm only comfortable with paying X amount of dollars per month. And so when they tell that to Lauren, she's able to say, well, okay, if that's what you're comfortable with your budget being, you may qualify for this amount up here, but if you're only comfortable with paying this amount, then let's use that to back into what your purchase price would be, right?
Yes, that's going to be one of the first questions I ask is what is your goal in this home purchase? Is there a monthly payment you're comfortable with? What's your current rent payment or house payment? Because that matters. That really does affect setting you up for success in this home purchase.
Yeah, absolutely. So being able to have these real conversations, being able to, as a home buyer, say, this is what I'm comfortable with. I don't care how much I might qualify for, but this is what I know I can pay this amount per month. Having that conversation is so huge, and having a local mortgage broker that is willing to have those conversations with you and be honest about what your payment is going to be and what affordability looks like, and whether that could be painful for you every month or whether or not that's no problem. Those are important conversations to have.
Absolutely. And also, when you're comparing conventional versus FHA, what would you say as a real estate agent, when you receive an offer, how do those compare?
Stigma in the mind of an agent is a conventional loan is generally going to be a more qualified buyer, which means it probably has a higher likelihood of closing. It could still not close. It could still fall out of contract because the financing doesn't go through, whereas the FHA may have been the one that actually could close. But when you're comparing two separate offers on the same home, generally an agent is going to look at a conventional loan and say that's probably going to be the stronger offer in most cases.
So that's why it's great to have a loan officer and a real estate agent who are collaborating together. So you want to strategize and be able to maximize your buying power.
Absolutely. And I would say that right now, as the market has become more balanced, it's a little less important, having a conventional loan versus an FHA from a competitive standpoint, because there are less multiple offer situations going on. But it's really good as a buyer to understand if I have a conventional loan or if I have an FHA loan, this is how it might be viewed when I actually do place that offer. So working together, having a team that is going to help you understand everything from the beginning to the end of what that looks like, how it presents, from offering on the home all the way to I actually am paying for this home, so important. So, Lauren, thank you so much. This has been an awesome conversation. I hope it's been helpful for you as you are thinking through the differences between, hey, which loan should I go out and get, and what you might qualify for. So, thanks, Lauren.
Thanks.